Good morning, everybody. Thanks for joining us for the Farm and Ranch News. Agricultural land values continue to increase over the past year. Now, higher land values are a double-edged sword. On one hand, it means increased equity for producers, but in a period of heightened input costs across the board, increased land and rent costs are yet another hurdle for farmers and ranchers. USDA reports the average value of all ag real estate in Montana at $1,070 per acre, up 4% from last year and 15% from 2021. Irrigated cropland at $35.50 was up 9%, dryland farm ground up 1% at $920, and pasture values 3% higher at $800 an acre. Well, our crew is back on the road again for the For the Farmers Harvest Tour. They're in Fairfield today, and yesterday they were touring around the Conrad area. Andy Schwab spoke with farmers Ken and Cindy Johnson. Ken said it's been a better harvest than last year, but the rains have still been few and far between. However, like any good farmer, Ken's optimistic for next year.
We're a whole lot better than last year, but we're missing out on rain still. We're only about 4.5 to 5 inches of rain since January 1st. So the crops are way better than last year, where we didn't harvest about a third of it. But I was just looking at a long-range weather forecast that calls for some increased precipitation at the end of the month. So we're hopeful that that will give us some topsoil moisture in order to get the crop started.
Thanks for stopping by this morning. Join us back here shortly for more ag news and the markets.
We asked Montana farmer Walt Sales about the challenges of mental health in agriculture.
Another drought. There always is. There's always going to be another something. I grew up in a generation of you pulled yourself up by your bootstraps. But it's become evident is what do you do if you can't even find those bootstraps? If you need to talk to somebody, go to beyondtheweather.com for free counseling for Montana ag producers.
Thanks for joining us back here for the Ag Market Report. After years of record large profit, the packing segment is starting to feel the pinch from inflationary pressure, reduced demand, and lower cattle numbers. This week, Tyson Foods announced plans to close 4 additional chicken plants after closing 2 more earlier this year, and Smithfield will close 35 hog operations in an effort to reduce costs and limit losses. Now, beef processing capacity is expected to actually increase over the next few years, but packers are estimated to be losing $100 a head right now, and as such have reduced their processing pace. Well, in the cattle futures, we bounced higher on Wednesday thanks to lower corn and a little higher box beef. In the cash trade, packer bids are coming in steady with last week, but cattle feeders seem content to hold out for more money. A lot of demand for calves in day 2 of Cattle Country Video's Oregon Trail Classic. In the sale, 5-weight steers sold from $310 to $3 1/4, upper 5 weights $285 to $310, 6-weight steers $265 to $285, and some lean 560-pound baldy heifers delivering in December brought $302 1/2. Lamb prices are finding support as the lamb on feed inventory is at more than a 10-year low and 38% below the 5-year average. And the wheat market back in the loss column. We'll see what Friday's USDA reports have to say, but early estimates are for a somewhat bearish report with 2023 wheat production expected to be unchanged and a large increase forecast for U.S. ending stocks. Well, thanks for joining us for this morning's report. Have a great day.